You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Tuesday, 5th day of November, 2019. Thanks for joining us. Whoever you are, wherever you are, we're just glad you are right here, right now. That's what counts, right? All right. I'm going to put a chart up. I'm going to put up a chart you may not have seen before. But after today, you can't say that. This chart, QMZ 19. And everybody said, well, what's that? It's crude oil. There's crude oil trading 57.25. And then if I bring up this chart, and we'll talk a lot about this chart here in just a moment. So the current price, we're trading at the high there, 57.25. 57.25. Crude oil. This is the mini crude. We recently saw the CME introduce the micro contracts, which are MES, MYM, MRTY, MNQ. This has been around for a while. Now, to just give you an idea of what kind of traffic there is, let me switch this out to a daily. There's 8,000, 16,000. These are daily totals, 16,000, 20,000. Now, while you might say, well, that's not a lot of volume compared to the full-size crude contract, you're correct. But for anyone that's just learning to trade, then I dare say that's probably ample volume for you to be able to trade. So far today, we've done 13,000. Looks like an average would be about, we'll call it 15,000. So we'll talk more about that in a moment. If you can't see the chart I'm talking about, go to our homepage at CFRN.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, not to worry, point any internet-connected browser, cell phone, tablet, your neighbor's computer. Just point it to CFRN.net/live, and there you will find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Now, let's just make sure it's still working. CFRN.net/live, CFRN Daily Live Broadcast. This page is live Monday through Friday, 12 to 2 p.m. Eastern. You click.
We'll send you out a no obligation information kit app.
And that's live. I hear it. I hear it. Oh, wait a minute. That's not today's show. Yesterday it was working. Make sure we're live on YouTube. We are. I checked it yesterday. It was working. See, it should say live on this page. Why would it work yesterday and not today?
We'll send you out a no obligation information.
All right, well, guess I get to go fix it again and figure out why it keeps breaking. But I'm going to fix it, so just keep it in mind. CFRN.net/live. All right, real quick, let's look at this S&P chart. High-level battle at the top. Yesterday, Michael and I talked about this head, this shoulder, and the potential for the market to come and put in a shoulder here. We said the neckline would be here, as highlighted by the blue line. And then we went on to say, however, we got a weekly trading zone just below that neckline. So we think the neckline should be there. So the blue line was broken, but the weekly trading zone hasn't been up until, well, we had this doji print here. We haven't really had any closes below. Now these green lines that you see, those are this week's weekly trading zones. I know it's not Thursday yet, but because this is such an important epic type battle here at the top, I just thought it only fair that the entire audience be able to understand what's going on. If we catch a break below this last buy alert at 3070, let's call that 3068. From 3068, we could drop. We probably will drop. We should drop. There is no should, would, or could. The market will do whatever it wants, but the next weekly trading zone below is 53/54. Okay, so That's a nice opportunity. And what we need is we need for this low right here to be taken out. And then I want to get below this buy area, because remember, important prices, important areas are almost always tested. Would not be unthinkable for this thing to come down, touch 3070. Oh, it did, right there. Swing low, 3069.75. So price actually did get one tick below the trigger, right there, and bounced to 71.75. We're below the BBC. So while this zone could prove to be good support, just like it was here, yesterday after we formed that right shoulder, we came down, touched the zone. When price touches a zone from above, we expect it to be good support until it isn't. And boy, was it. Sent the market straight up right here like a rocket ship. Hit the zone overhead. Missed it by one tick. Swing high 3085.75. The zone's actually 86. Zones are an area. Got to remember that. We get accustomed to price churning right at the zone like it did here, and well, like it does. But sometimes, so when you are using the zone to determine a trade to target, keep that in mind. Sometimes it'll come a few ticks short, a point short. Sometimes it'll spike it. Okay, zones are an area, so keep that in mind. So if we take out this low, then we go to 3068, a trigger. I think we have an alert out on that. And next zone on the way down. All the other zones that you see, those are still last week's weekly trading zones. Here on Friday, we consolidated at the zone for quite a few hours. From Thursday night at 8:30 till Friday morning at 7:30 a.m. From 8:30 p.m. to 7:30 a.m. 11 hours we consolidated in this tiny little range. Now this happened on a Thursday night, Friday morning. This zone right here that I'm highlighting, that was sent to CFRN partners and passport holders the Monday morning prior, last Monday, yesterday, a week ago, that Monday, at 6:15 a.m. Eastern. That's how it works. Partners get the new weekly zones Monday morning, 6:15 a.m. Eastern. We published these zones since December 14th of 2009, coming up on a 10-year anniversary. Now, if you're looking for an edge in the market, over the past 15 years in futures, I've seen a lot of edges. I've seen a lot of definable edges. I've seen some very good definable edges. But honestly, I have not seen any definable edge at any cost that performs as reliably and consistently as our weekly trading zones. When price leaves a zone, it's headed to the next zone. Price leaves a zone, it's headed to the next zone. And once it gets there, if it can't get through it, then it's heading back to the zone below. If it can't get through that, it'll head back up. If it can get through it, once it's through there and holds it on a pullback, then it's headed to the zone below. Price is always on the move from Sunday night 6 p.m. Eastern to Friday afternoon 5 p.m. Eastern. We start Sunday nights 6 p.m. Eastern when Globex opens. We keep the pedal to the metal all week long. Concierge Trade Alerts, Logic 247. Our room is open every morning. Our live room open every day, 9:30 a.m. to 11:30 a.m. Eastern. If you're not on board this gravy train, you can be before this show's over. Go to eminitrainingschool.com. eminitrainingschool.com. No credit card. Don't need your mother's maiden name. Just your name, email address, phone number, and you're going to get the best of what we offer. In fact, you're going to get everything we offer for the next 5 trading days. No credit card required. Why do we do that? Because we want you to be able to make a well-informed and intelligent decision as to whether or not what we offer is in fact the best definable edge anywhere in the world of futures trading. You try it, I think you'll agree. All right, let me give you the numbers from around the world as we wait to see what's going to happen. Now remember, we consolidated a zone over here for 11 hours. Could this become such a thing? It could. Price could ping pong back and forth between these two areas, and that in the middle, that was last week's highest weekly trading zone right there for the S&P. Right there. Okay, numbers from around the world. Oh, and I got some news. I'll share that with you when I come back. For those of you that use DT Pro and you like what TradingView offers in the way of charting, did you know that for a $10 bill monthly, you can use your DT Pro data on TradingView charts? I bet you didn't know that. I'm going to show you how to do it when I come back. Let me give you these numbers first. You got some fresh data. And I was very happy to find that out, because that means I can cancel my expensive TradingView data plan and use the data plan I already have. I like that. Currently, the Dow is up 24 points. NASDAQ is up 10. S&P 500 down 4. Russell 2000 up 3. In the commodity basket, crude oil up 69 cents, trading 57.23 last. That's a gain of about 1.25%. Gold down $26.79, trading 14.8430 last. That's a drop of 1.75% for gold. It also puts gold right at our lowest weekly trading zone for gold. So now think about this. If gold and the S&P tend to trade in opposite directions, which they do, not all the time, but most of the time, if gold is at its lowest weekly trading zone, if that zone holds, then that will send gold up looking for the zone overhead, which would be 93/94. If gold's going up, that increases the probability here that the S&P going down. Whichever one starts to move first, if they do what they traditionally do and trade opposite directions, that seems to be a pretty good picture. So we'll see. Maybe we'll see even during the course of this show. All right. In the Asian markets at the close, Nikkei posted a gain, 401 points, gain of 1.75%. Shanghai posted a gain of 16 points, and the Hang Seng gained 136. And in the European markets at the close, FTSE posted a gain of 18 points, the DAX added 12, and the CAC added 23. That gives us a green day in Asia, green day in the UK. It's a mixed day here in the US, only due to the S&P, down just over 5 points. With that, let's go to Michael, get a recap of what happened in the live training room. I'll be back. We'll talk to John. We'll look at the Concierge Trade Alerts and Logic 247 for the week. Michael, take it away.
Okay, I got it. Here we go. Man. I'm good.
Alrighty, it's all yours.
All right, thanks, Dwayne. Here we go. We'll start with this page. Okay. Actually, we won't start with that page. We'll start with this page. If you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. Over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. Click on that and you'll be brought here to eminitrainingschool.com. Now, I know Dwayne just mentioned this to you. You can go directly to eminitrainingschool.com, and all we ask for here is your name, your email, and your phone number. Hit the Register Now button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So you got to click that confirmation link, okay? Okay. Now we'll bounce back to that other one, this one. And we'll do the spreadsheet. Let's see, I have the question box open and there are no questions. Okay, today is the 5th day of November 2019. Today we made one tick. It was actually in the yen. I have euro/pound up here, but it was actually in the yen. I should probably change that. Euro, pound, yen, and then take yen off of this. Because the yen value changed. They split it like they did with the euro. It used to be the same as the ES. Okay. Yeah, so now I can just put ticks there and I don't have to put the dollar amount. But anyway, I'm just working through this all in my head. Today's 5th day of November 2019. If you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today we made one tick in the yen, 20 ticks in the Russell, 5 ticks in crude. We lost 4 ticks in gold. That put us at plus 116.25 on the morning session. Today it took 41 minutes and 3 trades to get to $100 a contract, and we took a total of 10 trades. Now that right there is why you put the mouse away when you get the goal for the day. Okay. It took me 7 more trades to gain $16.25. On the month now, we're at $506.25. That's over 3 days, averaging $168 per day. On the year, we're at $31,292. That's over 200 days, averaging $156 per day. Okay. All right. Let's get in and see what we did and didn't do. Gold is where we had the most action today, and where we also stopped out once. Okay, let's see. Started out here with a break even. Yeah, with a break even right there. Okay, and then we got another break even over here. I had totally forgotten that I had this trade on. I did that twice today. I should have gotten a lot more profit out of it, but I ended up with a break even right there. And here we had a long opportunity that I missed, another long opportunity that I missed. And then I went for the third bite out of that apple and it stopped me out. We're minus 8 ticks at that point on gold. Picked up 3 ticks right here to put us at minus 5. Missed this one and that one. Picked up 1 tick here to put us at minus 4. Then had another break even. Missed that one. And now we're getting into the break. During the break, no, that was not a trade. Right here was the only trade during the break. Been right there. One there and one right there. Okay, and that was gold today. Now, I got to bring the Russell up because we did take a trade on the Russell too. Let me find that chart. Here it is. Okay. Now, I was trading the Russell right here. This is where we got our goal for the day. I took a short right here and I put a target down here at 20 ticks and it took me out at 20 ticks. Went right through it. But then my DOM got all messed up and I couldn't trade the Russell anymore. There was a trade there, a trade there. I mean, there were a bunch of trades to be made on the Russell. But for some reason, my DOM was all messed up and wasn't keeping up with the charts. Okay, well, that's all I did on the Russell, so I'm just going to put the Russell down now. Put that down. And we traded the yen today. We didn't start trading the yen until it was right down here. And then we took a long trade right there. Got one take profit out of it. Okay, that was the yen. But the yen was tradable. It did have some opportunity. But we only got one take out of it today. Okay. Crude oil. Let's see. Go back to the beginning. We missed this short right here on crude off the BBC. And then we picked up 5 ticks right here. Now, this is, I told you it happened to me twice today. I had a trade on. I totally forgot about it. On the crude, it went all the way up here. I should have taken more profit out of this, but I moved my stop to +5 once I realized I had the trade on. And it took me out at +5 right there. Then I had a break even right there. And then we get into the break. And let's see, during the break. Well, it looks like during the break, it was a long opportunity right there. Well, it's coming together to be a long opportunity. It's not there yet. That's the trend line. It's going to close up above that trend line. But right down here, if we were trending, step 1 is make sure you have a trend. So right here was a long opportunity. Okay, because the entry was below the MA1. Well, actually, we broke dynamic resistance. I mean, no, this is dynamic support. Huh. Anyway, it was right there, the bounce off the BBC right there. And now what you'd be looking for is a close above this trend line. Okay. And on the ES, we didn't do anything with the ES today. It was in and around that weekly trading zone pretty much all morning. Yeah, here it comes. All right. So you see it was dropping down, and down here, see, right here, we didn't have higher highs and higher lows. We had higher highs right here and higher lows right there. There's an argument to say that you could have taken a long trade off the BBC right here, but I didn't want to. It came right back down into the weekly trading zone and then got really sideways in that zone for the rest of the session. And it's still bouncing back and forth within that zone. So this is an important area right here. You know how Dwayne always says it's important areas are almost always tested. This one's been tested a whole bunch of times. And this is the 4-tick range. If you look at it on let's go to like a 15-minute. I like the 15-minute. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times it's been tested. Today. You know, if you include yesterday, then 13, 14, 15, 16, 17, 18. 18 times it's been tested. Now, this is new all-time high, the high of the day today at 30.86. If we break through here, it's got like a 20-point drop. If we don't, and we start to move up, then we have a 13-point gain. That's what I'm looking at. But right now, we just got to get away from that zone. Okay. All right, so let's go back here. If you have not taken a free trial with us, go to the home page at CFRN.net. In the right-hand column, it says apply.cfrn.net. Click on that. It'll bring you to this page, eminitrainingschool.com. You can go directly to this page if you want to.
We'll send you out at no obligation.
Is your name, your email, and your phone number. Hit the register now button. Once you hit that, you'll be sent a confirmation link. You must click on the confirmation link. Okay. If you don't click the confirmation link, we don't know that you took the free trial. Now we'll look at the spreadsheet one more time. If you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today is the 5th day of November 2019. Today we made 1 tick in the yen, 20 ticks in the Russell, 5 ticks in crude, and we lost 4 in gold. That put us at 116.25 on the morning session. Today it took 41 minutes and 3 trades to get to the goal for the day. At that point, we were up $100 per contract, and we took a total of 10 trades this morning. On the month now, we're at 506.25. Now it's a new month, so we're just a little ways in, but that's over 3 days, and we're averaging $168 a day. On the year, we're at 31,292. That's over 200 days, averaging 156 per day. Now this is one contract, 2 hours per day, and you saw how many trades that I missed. So you should be doing better than that, okay? And what we encourage you to do is not try to get more points, but try to increase the contract count, okay? That's what we encourage you to do. All right, and with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes.
Okay.
Yes, I am.
Good. Let me go open that up.
Okay, there we go. Still in that same spot. Now let's look at that real quick on a daily. So we're right up into that area that we highlighted yesterday. The distance between this all-time historic high and this all-time historic high, about 60 points. So if we add another 60 onto this, just to see what a measured move would be, puts it about right there, which is kind of right where we are. Now, if we start to drop, looking at just this last leg up on the daily, okay. There's a 24% Fibonacci retracement, which lines up with these highs and these highs. I would say that should give us a pretty good bounce at the 24. If the 24 ultimately doesn't hold, then here's the 38, which lines up with these swing lows right here and this swing high. And then the 50% Fibonacci retracement. Again, we're talking about just the last leg up. The 50 lines up with these highs right here. So if we get there, that should be good for a nice bounce. Okay, let me show you guys this. And Michael, you'll find this of interest as well, I believe. So you go to my account, .gainfutures.com. It defaults to this tax page. So you just click here. You go over here to other links. Now you'll get these two options right here. Under software subscriptions, okay, I currently have a request. Okay, they've got to approve that. Okay, so what I'm doing, guys, is I've enabled TradingView, $10 a month that you pay to CQG. Now this is only if you want to use the TradingView platform. Okay. Now, hang on, I'll show you something else too. So my account, .gainfutures.com. You're in your portal. You go to software subscriptions, and it has a list of different ones that you can enable. I can't see that now because I have a transaction pending. But let me show you this here. Come on. Under other links, manage third-party software. As a Daniels Trading client, as a Gain Capital client, you can run any of these platforms with your DT Pro CQG data. AbleTrend, Agena Trader, Bookmap, eSignal, Inside Edge Tracker, Investor/RT. I think that's the one that the market profile people use. Jigsaw. Most of these you probably never heard of. Most people that aren't Daniels Trading clients haven't heard of DT Pro either. So, but of course everyone who is a client knows about it and uses it. LA Chart, LA Spreader, MedVed, MotiveWave, Multicharts, multicharts.net, NeoTicker, OpenQuant, Order Flow Trading, Overcharts, Right Edge, Sierra Chart. I never did like Sierra Chart for some reason.
Yeah,
Because it was in German.
I didn't
don't
either.
know. Stock Sharp, TA Trader. Seems like I used that at some point in my life. TA Trader. Not familiar with it. Tiger Trade, TNT, Trade Navigator, Vol Fix, Vol Fort, and VX Charts. Did you know about all these, Michael? Because I didn't.
I did not.
Yeah.
I did not.
So I haven't attempted to enable any of them because I don't have any of that software downloaded. But apparently all your instructions are here. And my understanding is, like, you know, I've got to pay $10 a month for the TradingView hookup. But these are all just included. When I opened up, these were already enabled. So I chose to enable the CQG for TradingView. That's $10 a month. And the reason I even came to this place of finding all this out is because on TradingView, in order to get the E-minis, all of them, some of you may not even know this because you have free data from DT Pro, Daniel's Trading, so you don't really have to think about it. But the Dow, the YM, that's on a different exchange than the S&P and the Russell and the NQ. Did you know that? Okay. Crude oil. If you want crude oil, you got to get the full NYMEX package, which is $110 a month. So if you want all of the E-minis, including the YM, you got to pay $110 for that. And then if you want crude oil, you got to buy the NYMEX package. That's another $110. And then if you want gold, you got to buy the COMEX package. So, I mean,
Starting to sound a lot like trade
yeah,
station.
I was just going to say, when I left trade, or when Michael and I became certified trade station developers, I was paying like $300 a month in data fees, which is why we became developers, to get discounted data. And so with TradingView, boom, right back up to that $300 mark, which if you count for inflation, I guess maybe that's not so bad, because that's what I was paying back in 2005, 2006.
Yeah, a long time ago.
Now, for just $10 a month, I get to cancel all of my TradingView subscriptions. I don't need the COMEX, I don't need the NYMEX, I don't need anything because I already have it all with DT Pro. Now, the one thing I will keep with TradingView is access to stocks, individual equities, mutual funds, and that kind of stuff. That's relatively inexpensive. That comes as part of the premium TradingView package, which I think is $59 a month. So, there you go, guys. This opens up a whole new world. I have a lot of this stuff I've never even heard of. You heard of any of it?
No, I've heard of some of them, but you know, I used to program Sierra chart stuff, and Able Trend. I used to get mail from them all the time, but
I took their trial one time. Long time ago.
John's in the room. If you don't know
Is he?
his mic up. Yeah.
Okay, sure. All right, guys, we're going to talk to John, and then after we talk to John, we'll do a recap of the Concierge Trade Alerts from last night, also the Logic 247 for the week so far, as we continue this high-level battle at the top. So here's the jigsaw. Interesting. John, you there? John's not there, man.
His mic's open.
Okay. All right. Yeah, this jigsaw looks interesting. I'm sure they're all interesting, and I'm sure each one has some little thing that makes it special. But the fact that you can use any of them that you like with the data you already have, I think Daniel should like toot their horn, you know, make a big deal of that.
They should.
But they know better than I. S&P trying to stage a rally here. Yep. So, this consolidation, guys, just when it looks like all might be lost and we're going to take a dive, buyers come in at the area we expect. This swing low here, 69.75. Remember, it put us one tick back below that trigger. So let's go ahead while we're waiting on John, and we'll take a look at last night's Concierge Trade Alerts. If you want to grab a screenshot, here you go. Got them out last night, 7:05 p.m. Eastern. We wanted to be long 30.89, short 30.69, and hopefully you can see why. 30.89. And 30.69, because we want to get out of this. Well, it's what I always tell you. When price is between the two lines in the sand, that's the market making up its mind what it's going to do. So there's the Concierge on the short side and on the long side. So see, we got to break out of this consolidation, this high level battle at the top. Here it is on a daily chart. Right there. We've hit that area for the measured move. Question is, does the market have enough of the right stuff to power us up through? What we can see is good resistance. One of these two will trigger. Then the key will be, what follow through do we get? I mentioned this before, price is below the BBC. So the bias, if we were bias type folk, we would say the bias is to the downside. That narrative only changes if price can get above this green line. We call that the BBC, bull bear cross. When price crosses above it, we're bullish for whatever time frame we're looking at, and when price crosses below it, we're bearish for whatever time frame is being observed. Okay, so nothing has triggered yet on the Concierge for the S&P. John, did I hear you there in the background?
You did.
Okay, yeah, welcome.
Thanks.
Glad to have you with us.
Likewise. Thanks very much. Well, we did get a little bit of a pullback. We did go a bit higher, like we suggested last night. And it's important that, the audience understands that, I live in a very short-term world. I can be bullish one minute and bearish the next, and I think you're pretty much the same way.
Absolutely.
And that's the. As a matter of fact, this system that I'm developing right now is extremely sensitive to reversals, and it's a very strong discipline situation, because this thing kind of gets your head out of the way. A lot of times you can look at a trade and you're sort of deciding whether to get in or not out, and your head might give you the wrong decision.
Right.
How many times has that happened?
More than I can count.
Right, exactly. So this is a really, and this thing, it works so well that it gets you on the trade. And it's kind of like the gold this morning. I was actually looking at the gold earlier on, kind of pretty early this morning, and it actually kind of made a spike and looked like it was going to try a rally, which is typical. And then for whatever reason, the rally reversed. And next thing you know, you're on a pretty big trade to the downside.
Yeah.
If you took that discipline, which was, glaringly obvious once it started, you ended up with a very good trade, $2,500 trade, really.
Our alert last night, John, Concierge alert last night for gold was to sell 1508.
Yeah, I just saw your line there. Looks like it was a line, or maybe a little bit below it. Yeah, I see that.
1508. This was right here last night.
So we're at 14. So it's about a $1,500 move for you. Is that right? No, more than that. 20.
We're at 85,
40,
so
right.
it's a little over $2,000 move.
Right, 2,000. Yeah, not bad at all. So, and I mean that was we remember we said yesterday it looked like the metals had reached a resistance point, and it didn't look like they were going to go through it, and we should have really kind of thought a bit more about the possibility of a breakdown like this. So we've been saying for a while that it could come down to 40 and 60. I'd say, given if you can put up the daily, I'd say that given the way we've pulled back on this move, and the way the dollar, once again, the dollar and the gold are kind of back in sync, and where the dollar's going up and the gold's going down.
John, we're at this week's lowest weekly trading zone on gold. Already, today's only Tuesday. We're at our lowest weekly trading zone. These other zones on the chart are last week's zones. So we've already hit the lowest, and that whenever that happens by a Tuesday, whether it's the S&P or gold or crude, that sends a pretty strong signal for us anyway. Now you said you wanted to look at gold on a daily.
It's interesting. It's interesting. For the benefit of the audience, it's interesting that you actually said just what you said, because that's really, I wouldn't call it proprietary knowledge, but it's certainly experience that you've seen this movie so many times now that you can actually make a statement like that and it has meaning. This is valuable, very valuable market intel to be able to, and as is, look, it's hard for people to get their arms around the value of these weekly zones, which I think is something that you developed.
Yes.
And it's remarkable, because look at the way this gold, we said it yesterday, it's having trouble getting above that 15-20 weekly range.
Yes.
And it was sort of slip sliding away, and once it took out that 12, i.e. the next weekly range, it just like collapsed. So, and look at the way it bounced. It actually bounced off that 15-20 range. So, it's hard to trade off those ranges, to be honest with you. Maybe when you've been doing it as long as you have, it's easier. But
once you understand where price is trying to go, and let me just show you the little way that I do it. Very simple. When price gets above that green line, I know it's trying to get to the zone overhead. And then when price gets back below it, I know it's trying to get to the zone below. And so on the way down, as you can see, price it keeps pulling back. Price always reverts to the mean. But in every instance, I knew that price was trying to get to the zone below, because it stayed below the bull bear cross right there.
And you see on my work, as soon as, really from 15-12 onwards, you're in a very negative, you're just in a negative mode, and it's telling you to stay short.
Exactly. Oh, that's a good point. Do we have an exit signal yet? Let me check that for everybody.
Go back and look at it a little bit better.
The exit signal, no, we have not printed an exit signal, guys. Now, what'll happen, this black step line, it'll hook a turn here. It has, it's already crossed over. So if this candle closes green, that will be the exit price for this trade. 1508 to the first green candle that closes above this step line, now that it's crossed over. See, it starts out on the left side on a short trade, then it gravitates to the right side, and once it crosses over, a green candle closing above the step line, that price to the tick, that's your exit. It'll never get you out at the swing high or swing low, but then nothing can, except luck, because we never know it's a swing high or swing low till after the fact. So, go ahead, John.
Yeah, actually the last sell we got really on this one was about 1508, 15075, right down to here, and it was a pretty brutal move down. What I wanted you to do, could you squeeze it up and see how that looks with where, because remember it bounced off this level previously fairly dramatically, but this time I think it's probably going to go a bit lower first.
So there,
Yeah,
there we
it's
go.
a different kind of picture altogether from before. You see that?
Well, absolutely, because up here, price was above the BBC, the green line, right? And it just reached down and touched that, almost like some kind of compulsive, obsessive type behavior. It's just like it had to touch it before it could move on, and it did. Now, this time price was north of the green line, and this time price is on the south side of the green line. So you're right, it's an entirely different dynamic. This was almost an aberration, whereas this was exactly what was expected.
Remember, we said we actually said ahead of time when we were coming off this bottom October 29th. We said the Fed, that it might spike on the Fed, and to try and take advantage of that, and that's actually exactly what happened. So, by the way, the copper is.
Oh, that was copper. Yeah, let me bring it back up.
Pretty strong today. Can you put up the daily? See how it looks on the daily?
Copper or?
The copper is at a critical point here. Remember, we said this thing looks like it's headed up to 270. I think it got there already, and then potentially up to 282. I guess would be the next level.
71 to 75 for me is a.
Yeah, we're at a pretty critical point right now.
That's $1,000 move.
If we sell off here and go back down, that would change the whole picture. But I think the copper has gotten some support from a strike, a copper mine, and also the rate cuts definitely are probably helping the copper as well. So I think look, I'd still be buying dips in copper right now, given the rate cuts and everything. We also got hit pretty hard on the palladium. This palladium, anytime it gets hit, you've got to be cautious on the gold, because it sometimes can be. So it really looks like we're probably going to test the 1460, like we said, 1450, 60 on the gold, and then potentially take off from there. It could get down to the 53 there, which would be the top of the previous, just in a 1 or 2 day, extreme here. We tend to, the gold tends to bottom in the middle to late November, and it can usually rise in December. So, and recent in the last few years, in spite of the fact that it was generally down, going into the end of or down in trend, we got a pretty strong start to the year, and it usually started sort of like late, mid-December through into January and on into February, March kind of thing. So I think given where we are today, if we do get that test of that big line that you put in there right now, and we come off of that, we've got a potential double bottom in a bull market. I think that's very bullish. And if we start getting back up, the trouble is the way these markets work, when they get beaten down like this, it's kind of hard to buy the dip. But I think when you see evidence of an upturn, that's
we got a strong volume day going in gold too, John. Take a look here.
Yeah, well, it's a manipulated trade. Doing what happened today, they came in and knocked it down big time, because in this last rally, the commercials were caught short, and actually the commercial picture has been improving, I believe. But I think they got caught short somewhere in or around this range. They probably want to knock it down to cover their shorts and get set for the big run. Also, the injections that have been going on, injections of capital, have kind of slowed a bit, sort of removing the kind of panic, whatever panic caused that. So that, which was potentially pretty bullish for gold. So, I'd say that's sort of taken the shine off gold temporarily. But I think, what we commented on yesterday of China, improving and the markets in China. I mean, actually, there's no pullback in China today. They're making higher highs. So that's quite bullish. The fact that the emerging markets are kind of leading the way higher, I think is a positive. You know, in spite of what we said yesterday about the general trend being higher, given everything that's going on, could you just put up the S&P for a minute?
Yes. What time frame you want, John?
Just stick with the day for the moment.
Daily, you say?
Yeah.
Okay. Here. Let me do it this way. Where do you get your data? Where do you get your data from, John?
Get it from DTN.
Okay. Because there's a good chance that your data will run on this TradingView platform. I just found out today that mine will. It costs me $10 a month for CQG. They got to send it CQG, but I already have, you know, free data with my account with Daniels
Are you
Trading.
using CQG in its, you know, for charting and stuff?
Yes. The data that runs the DT Pro platform, everything under the Gain Capital umbrella, which includes Forex.com, which includes Daniels Trading and all of their other introducing brokers. My understanding is that's all CQG data. And so when I went to hook up, when I found out, because I was tallying up my subscriptions on TradingView, and to get the CME package, the COMEX package, and the NYMEX package, I was looking at like $300. And that's just too much.
Yeah.
So then I found out that I can use my data package that I have, which costs me nothing at Daniels Trading. Just as a client, you get free data. I can route that data through TradingView by just paying an extra $10 a month. So instead of paying $300 to TradingView, I'm paying $10 to CQG, and I'm going to have everything I have on Daniels Trading on TradingView.
I think I'm going to try doing that with them. With
Here's
my
what
feed.
you do. Now go when you launch TradingView, pop open down at the bottom where it says Trading Panel, and then look for these major data providers: CQG, AMP, Wanda, Forex.com. That's Gain Capital right there. Different division, but it's Gain Capital. Our broker.
Oh, I'm going to use Saxo. I'm going to use a Saxo feed there.
You can use that. Yep. All you got to do, you might have to. Now, since it already shows up here, I think you might be able to just use your user ID and password and just log right in.
Well, you know, I think they should redo the whole subscription thing with the CME and all these exchanges, and you should just sign one deal.
Here, so you see this Saxo pop up, John?
Right, yeah.
So you'll be able to just you won't have to pay an extra $10. It looks like you'll just be able to log right in.
Okay, that's interesting. Yeah, but I think you know you should just get one deal, because I'm actually paying double or triple. In fact, I'm paying double just with Saxo for the other stuff I'm getting on. Whereas really, why should you pay more than once for the data, you know, that you're getting from the exchange? It's crazy.
Hey John, open an account with Daniels Trading for a couple grand, whatever their minimum balance is. Even if you just let the money sit there, they have no monthly fees. I think you got to pay $17 a month to the CME, but they give you free data. If you have an account with Daniels Trading, you get free. I get everything. I get crude. I get gold. I get soy. The only thing I don't get is equities, but the equities are actually very cheap here on TradingView. I think I pay $59.
Do they use CQG data, or which data do they? Do you know what data feed?
Yes, I'm pretty sure TradingView uses CQG data.
No, but Daniels, what are they?
Yes, CQG, right.
Okay, yeah.
Because Daniels is an introducing broker for Gain Capital, and Gain Capital uses Gain Capital data. Pretty sure it's CQG. It has to be. I'm thinking. CQG is pretty good data. Gain Capital, CQG.
Does Daniels do stocks as well as futures?
No, just futures. So I get my stock information off TradingView because that's very reasonably priced. And my goodness, so gain capital, CBOT, CME, COMEX, DME.
Daniels is online. They go online as well as a broker, yeah, or not?
Well, there's software you can download, and then there's a web-based browser that you can use to trade on as well.
Uh-huh.
So now going back to TradingView, let me just show you. And navigate my way there. Account and billing. Okay. So add extra market data. Now, look at all the options that you have here. And now this is just the U.S., right? There's all this, and then look here, Middle East, Africa. There's Europe. Look at all these different exchanges.
Yeah, they've got the same thing with Saxo. They do all that.
Do they?
They can do everything. Who's that with, Gain or with Daniels? It's Gain, right?
This is TradingView that we're looking at.
Trading. Oh, okay.
This is TradingView. Yeah, like, some of the stuff I'd never heard of course. Some of it's a couple bucks, $1. Some of it's $20. But the list goes on. There's Mexico and South America.
That's pretty sophisticated.
It really is. It really is. So the learning curve with TradingView was a bit steep for me, but it's because I didn't persist. I kept, bouncing in and out, and I'd try it and get frustrated, and then, but now I'm sticking it out, and it's all coming together. And it, once you understand it, it all makes perfect sense, and it's like, well, gee, why did I make that so hard to start with? But when you don't know what to click to get something, what you need is just one mouse click away, but you don't know where, and I find myself going to Google, typing in the question, what do I click on TradingView to get this? Google finds it like that, even when I can't find it in the manual that goes along with TradingView. So you wanted a daily of the S&P, so here it is. This is the futures.
Yeah, I mean, look, if right now, excuse me, we are actually we're a little bit negative on the S&P, but the Dow is still up quite a bit.
The Dow hit a new all-time high today, right?
Probably. The rest of it, look, the transports are super strong today.
Here's the Dow.
So
right here.
it's right. The transports are very, very strong. That's kind of giving you a bit of a different picture with the S&P, but I would pay more attention to the S&P, because if we do sell off late today, that would be a problem. We have some very strong stocks. If you want to put Adobe up, ADBE.
Here's the SPX cash.
Yeah, a little bit of a different picture there. I mean, look, if something bad happened overnight and we closed right about these levels, you'd have an island top there, and that could be very, very, very problematical. So, there is a risk. We've got a great trend going, but we've been at it now for 3 days. It's probably running out of gas. And if something bad were to happen overnight, and we actually gap down tomorrow, I would be probably going to turn pretty bearish again. So that's something to keep in mind. Boeing's actually going very well today. One of the reasons why the Dow is strong. Look at Adobe, ADBE. Big move up there. Have a look at BGNE, see how that's doing today.
BGNE?
Yeah, it's kind of looking for this to be a possible short from the highs, but it's
super
strong. So, yeah. Have a look at
what is this, John? Hang on a second. Each represents 13 ordinary shares. Tell us about this. What is it?
I don't know.
Is it a 13 to 1 leveraged type of thing?
Don't know what the deal is there, but I think it's just tradable as a stock, as is QRVO. Very, very strong. But as I said yesterday, super strong situation. So, if the market keeps going up again, those stocks are probably going to go higher. It's a Chinese pharmaceutical company that just did a deal with somebody. It's actually been going sideways for several years, and it's suddenly shot up. I think it's probably a pretty.
Oh, look at that!
Yeah.
Mm-hmm.
So it might be a good idea to have a LABU. See how the pharma sector is going in general.
LABU. I was listening to a podcast yesterday called Bad Batch. It's about this company that was doing stem cells. And they were you could go to a chiropractor's office and get shot up with stem cells for $5,000. The company making the stem cells was Gene Tech, and I'm trying to think of the name now of the company that got caught up in the middle.
Up in Massachusetts, somewhere up around there.
Let me look and see if it tells me on the podcast. Find a Bad Batch. Bad Batch.
Click on the LABU to just take a look at that.
Oh yeah. There you go.
Yeah. See, a little bit trouble there it's just having a real hard time getting out of getting a serious trend good. So good so far. It really needs to kind of gap higher now or accelerate to the upside to kind of really get this sector going. But when you look at where in just 2 months, it's not a bad gain if you bought it at 30 or so. We were down there saying it was a pretty good buy back then. The transports are worth taking a look at today. They're actually
there you go. Oh, that's the end of day data. Maybe I got something better than that.
Okay, so you got another. It's actually already over 11,100 today. 11,100 is up 105. So you can add. That's the equivalent of about a two.
Now this one's just delayed right here, John. This one's not.
That's
end of day.
Yeah, it's okay. You've got the equivalent of a 270-point move in the Dow on the transports today. So pretty powerful. Mm-hmm. I mean, look, that's Thursday. Basically, the Fed move, this Fed easing has look what it's done. It's just really electrified the transportation sector. Probably some earnings came out as well to help. FedEx is looking very strong. Probably UPS as well, and some of the transports.
There's FedEx.
Yeah, some of the transports we looked at. Let's look at UPS. It's a lot stronger. So I think that's approaching an all-time high. UPS. So transports really looking.
No, here we go. Here's UPS over here.
Yeah. But a major breakout zone for that, potentially. So, where do those buy and sell signals come on that chart? Where's that coming from?
Oh, it's just a just a script that I'm running. They're not standalone buy and sell signals. There has to be. Yeah. I have another thing I look at for confirmation. Mm-hmm. Basically, if price is above the BBC, I'm going to ignore any sell order, and if price is below the BBC, I'm going to ignore any buy order. Mm-hmm. And that right there weeds out over 50% of the buy and sell signals. So it's just a simple little script. It's nothing sophisticated, But I
Can you-
found that the simple stuff, you know, when used properly, when you understand what it's telling you, and you're able to weed out, you know, 50 to 60% of the bad signals, you know, without ever having to put on a trade. It's simple. I like simple. Go ahead. What was your question?
Could you put up the coffee,
Yeah.
December coffee?
Coffee future.
You remember we've been pretty bullish on that on coffee since the 90s.
There's December.
Yeah. So again, it's gotten up to a critical point. Could be, if it turns down again from here, I would say that's not good news for coffee. But
This is an end of day chart, by the way.
Yeah.
That's about the ICE exchange.
Yeah, it's up. Coffee's up a couple of more bucks today, so it'll be at about 105, 106. So it actually is breaking above that previous level, but it's kind of a really critical point here as to whether the coffee has bottomed or whether it's got more work to do. That's pretty much the roundup of the day, I think, of the important things that are happening.
Okay. All
So
right, then.
is Gary coming on tomorrow?
You know, he sent me an email, said he'd been trying to reach me by phone and couldn't get through. He asked me to call him. I need to do that. But yeah, I'll ask him to try and make sure he comes on tomorrow.
Okay, great. Alrighty, well, listen, thanks very much.
Okay, John.
Have a great afternoon.
Thank you very
Okay,
much.
all
Have a
the
great
best.
day.
Bye-bye.
All right. Okay. I'm going to see if my CQG has been enabled yet. The guy at Gain told me, he said once you put in the request, which I did, he said it typically gets approved same day. And I'm thinking after the show, if I call him and he can see that I'm in the queue, he could maybe just go ahead and approve me. It's still not turned on yet. Okay, something in the chat box. What do we got? What do we got? Let's see. Hey, Don. Euphoric. U.S. equity futures positioning among asset managers is nearing July 2019, September 2018, and January 2019 peaks. Okay. Okay. Well, thank you, Don. All right, let's go back to... Now, this is a this swing trade here, potential swing trade on crude. 75 to 70. At 70, you should expect support, expect a bounce. If that obstacle can be overcome, then we're talking 1453. But from 70 to 53, that's another $1,700 per contract on top of the $500 per contract that this represents right here. Okay, all right. And on copper, that's $1,000 per contract move, 271 to 275. A penny move in copper, 1 penny from 271 to 272, $250 per contract traded. So a 4 penny move. There you go. Tim late to the party. My CQG data on trading view is not turned on yet. Tim. Okay. So I would mark these two down, guys, the copper and the gold. All right. Now, back to gold here. Last night's Concierge Trade Alert. Consider being short. 1508. We triggered again. Each time price tried to rally up, it could not get through the obstacle overhead, which is the BBC. When price approaches from below, it's an obstacle. When price approaches from above, it's support, just like a weekly trading zone. Okay, so we got through 1508. We had a zone last week at 91.0102. Then we had another zone at 91.92, and you can see when we got to 92, it bounced all the way up to 90, basically 97. It's about a $500 per contract bounce. It could not get through the obstacle, red and falling, and here we are. Now, if this candle were to close green, there's 10 minutes left in the life of this candle. If this candle closes green, that is the exit signal. Short 1508, no exit signal all the way down. Right here, step line is crossed over. It crossed over here, but look where price is. It's crossed over here, but look where price is. You're looking for price to also cross over. The step line crosses first, then we want to see a green close above the step line, and the closing price of that candle becomes the exit signal. Okay? And based on what we see right in front of us, which is a red 30-minute candle with 9 minutes left to go in the life of the candle, we could just consolidate here at this week's lowest weekly trading zone. Let me throw the corresponding one out there with it. These others are last week's zones. But these critical areas, you see, if we find support here, gold starts to climb, or the ES finally breaks here, either one, whichever one moves first, could most certainly set the other in motion. And typically, gold and the S&P will trade in the opposite direction. For now, we remain trapped at the top. This is a high level battle at the top. We have reached that area, a measured move, the distance between previous swing highs and the current right here. That's it. That's what it looks like on a daily. This is what the battle looks like on a 30-minute chart. Bias has to be to the downside because price bounced off of support and hit resistance, which is the BBC. When you approach it from below, expect resistance until it isn't. Just as when you pull back to it from above, you expect good support until it isn't. It really can be that simple. So last night's Concierge Trade Alert for the S&P has not triggered. The Dow has not triggered. Remember, when you put your two lines in the sand, when you get the alerts each night, the Concierge Trade Alerts in the Telegram channel, put your two lines in the sand for every market that you trade. Look at the Russell. The Russell. $16.03. Right there. $16.03. $16.03 to $16.13, so that's a 10-point move in the Russell. $50 a point, $500 per contract traded. $500 move. 10 points, $50 a point. Now, I'm not sure why I don't have last week's zones on the Russell. Ah, I do. 75, 76. And then overhead let's see, what was that one? 76. Oh, the next one from last week was at 1598.99. I won't bother putting it on there right now. So we had a last week zone at 98.99. Price is finding support at it right now. If support gives way here on the Russell, then look to the S&P, look to gold, look to see them start moving in opposite directions. We could have we could have a big move on tap here. We really could. And the market's primed to do something because it's been consolidating now since 3 a.m. yesterday. Right there's the London Open. Again, bias to the downside only because we're not biased type of folk, but the bias is to the downside because we've approached the BBC from below, resistance, till proven otherwise, which pushes us back down to support, which will send us back up and back down. And that thing will get pinched up potentially here, and then the market has to make a decision. It has to go one way or the other, and it will. We could bounce around in here for days. I hope we don't. I hope we can. I'd like to see a good swift move to the downside, but that's just a personal preference. As futures traders, we don't really care if the market goes up or down. Our only concern is that it goes somewhere, as long as there's movement and not trapped in a range like this. Now, this range from 73 up to 86, that's 13 points. 13 points up, 13 points down. But you have these obstacles in the way that I just prefer to not have. All right, so we've done the S&P, we've done the Dow, done the Russell. Russell, the only one that triggered so far. Let's look at the NQ. NQ last night, 82.55, has not triggered. Line in the sand. And the flip side for the NQ, 81.85. So far the Russell's the only one that has triggered from last night. Oh, and gold. Gold triggered big time. That's a beautiful move for gold. So let's look at crude. I think I heard somebody mention in the discussion channel last night that crude triggered both sides. Let us see. Okay. The alerts came out at 1905. So let me find the 1900 candle. That would be right there. So that's when the alerts came out. The short side for crude was 56.35. There we go, 56.35. Swing low, 56.30. And we talked about this yesterday. When price marches up to a trade alert, you could think of it right along the same lines that you think about a weekly trading zone. Okay? It's a place where the market has to make a decision. It walked up. Now, I use the prairie dog analogy sometimes from Mike Reed. A prairie dog, if you don't know, they live in a network of tunnels underground. And when they want to come out and do prairie dog stuff, they stick their head up out of the hole, look around. If the coast is clear, they come out. If the coast isn't clear, they duck back down and burrow into that network of tunnels. So think of that right here. Prairie dog looks around, doesn't look good, heads the other way. Okay? Now, when he gets to this zone from last week, which we expect to be good resistance, and it was, so that resistance sent price back down to support at the BBC, where we've bounced a little bit and just look for this thing to go sideways until the decision is made. Are we heading for the next zone overhead? Are we heading back to the zone below? So 56.35 on the short side and 56.80 on the long side. There we go, 56.80. So from 56.80 to the zone overhead, it's 50 ticks at $10 a tick. So that's going to be a $500 per contract move. Bullish cross. Price pulls away. Price pulls back to physically touch. Up close. Off we go. Leg retracement, leg retracement, leg retracement. Now, follow the bouncing ball. Leg retracement, leg retracement, leg retracement. You see what happened here? We failed to put in a higher high here. This candle may be the turning point, as it's called. There's a high, higher high, higher high, higher high, higher high, higher high, lower high. Are we starting to build legs in the opposite direction? We're going to find out here in a few minutes. Leg, retracement, leg. So what happens right here, if we get below the BBC, now when we get below this trigger at 56.80, you got to be prepared for a bounce there, because important prices, important areas are almost always tested. We've already looked at gold, so we've covered them all. This could be the exit signal. Okay, the last candle, we're 2 minutes into this new candle. If it closes green, then that's your signal to exit the short at 15.08. Do you have to wait for the exit signal? Well, no, it's discretionary trading. You can do anything you want, anytime you want. Well, what if bulls came raging into the market, gold bulls, and drove this thing all the way up to the zone overhead? Well, that would take some of the cheese off of your macaroni. Could you say, I'm willing to wait for the exit signal, but I don't want to give up more than that of profit that I've earned? You didn't win anything here. Okay? There was no winning here. Stop winning. Earn. You gotta earn your money right here. You earned this because you were at your platform when it triggered. You managed it properly. You recognized that the trade took very little heat because we never got meaningfully above the BBC. We poked our head up a couple times, touched that zone. Okay, so you did everything you're supposed to do. You earned your money. Okay, now just to make sure that some weird thing doesn't happen, price spikes way up and you lose hundreds or thousands of dollars, put a stop right there. Which means if it takes out the lowest weekly trading zone and continues lower, you get to participate. There's an open door there. But you're managing the risk because you're not about to give back money you earned. You earned it, it's your money. This right here almost becomes a separate trade unto itself. You had this trade, right? Now, you're going to lock in all this profit. We know important prices, important areas are almost always tested. In this case, this is the important price, important area. If price is going to go back and test that, which someday it will, I don't know which day, probably not today, but you don't want to take that ride back up. No. So right here, you set a stop there or there, as tight as you want. Discretionary trading, you get to make the decisions, okay? That's going in the bank. And if we continue dropping, I'm happy to participate. If we don't keep going, if buyers do come in, if the S&P starts to sell off and gold rallies, well, then I'm out here. And my profit is safe in the bank. Okay? All right. So we covered the S&P, the Dow, the Russell, the NQ, gold, crude. All right, let's look at Logic 247 real quick. We are in week 66. And in this high level battle at the top, 14 alerts have been issued, 12 actionable, 4 got stopped out, 33% of actionable alerts stopped out. I told you the pendulum swings both ways. We've been going through weeks of 10% and 14%. I don't anticipate the week continuing in the same vein. I just know that that's why there only been 14 alerts this week, because we are in this high level battle at the top. Let's take a look at the individual ones. Last week, for the entire week, now let's roll up one more week. See what the week prior was. Okay, week 64, 9% were stopped out. That's week 64. And then week 65, week 65, 14% were stopped out. Now we're in week 66. It's only Tuesday and 33% stopped out. Sunday night, Globex Open started out Sunday night, 6 p.m. Eastern. Started out with the S&P long, the Dow long, the Russell long, NQ long. Gold decided not to go long. And crude oil. And then into Monday, S&P long, Dow long, NQ stopped out, Russell stopped out, crude oil stopped out. And these two are open, and that one's already done the deal. So, there you have it. I say it's time for our good word for the day. If you have any final questions, put them in the chat box. Be happy to answer them for you. Teachable moments. Joshua 4:21. What do these stones mean? The complete scripture, he said to the Israelites, in the future, when your descendants ask their parents, what do these stones mean? One of the most effective ways to teach is through teaching moments. Jesus did that. When a fig tree didn't produce fruit, what did he do? Hug it? Love on it? He cursed it. I don't think he used curse words, but he cursed it. And it immediately withered up. This is Matthew 21:18 through 22. Now, when Jesus cursed the fig tree, the disciples found that of great interest. He explained to them, unless you stay filled with God's Spirit, you won't be fruitful in His service. He could have taught this same lesson in the synagogue, but then his listeners would have had to imagine a fig tree, and the message would have been diluted depending upon the ability of the hearer. When 3 drunken high school students crashed their car into a tree, the wreck sat in front of their school for several days. Every day the students had to look at it. That's called a high-impact teaching moment. It's been said that timing is everything. That's certainly true when it comes to learning the important lessons in life. So don't miss them. If you're a parent, it's futile to constantly preach at your kids. If you're a leader, it's a mistake to keep lecturing the people who are answerable to you. Let the experience speak. Then ask for their thoughts. And here's the hard part. Listen without interjecting. Let them have their say. Let them get it out. You might learn something. I know I do. People learn more through discovery than dialogue. That's why God instructed Joshua to build a monument of 12 stones on the other side of Jordan after he miraculously parted its waters so that they could cross over. That's Joshua 4:1-9. When all the nation had finished passing over the Jordan, the Lord said to Joshua, "Take 12 men from the people, from each tribe a man, 3, and command them, saying, Take 12 stones from here out of the midst of the Jordan." You know the scripture. Teachable moment. Something to remember. This was where the Israelites are running for their life. He parts the water. Teachable moment. What he was really saying was, when your children ask what this monument is all about, use it as a teaching moment about my love and my faithfulness. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.